Welcome to The Explainer. Today, we are diving deep into the story of Circle. Its stock price just absolutely exploded right after going public, and really, it signals the start of a high-stakes war for the future of money itself.
Okay, so check this out. Circle, the company behind the USDC stablecoin, they went public on June 5th at $31 a share. But then in just 2 days, the stock price shot up to 115 bucks. We're talking nearly a fourfold increase. That is, by any standard, a pretty wild debut.
So, this begs the question, right? What is going on here? Why all this incredible excitement from the market? I'll tell you, it's not just about one company's balance sheet. It is a sign of something much, much bigger happening under the surface.
As it turns out, investors aren't just placing a bet on Circle. No, they are betting on the entire future of money. They see this massive digital transformation coming for the financial system, and frankly, Circle is one of the very few ways to get in on the ground floor. The hype here really boils down to a perfect storm. First, you've got the absolutely massive potential of the stablecoin market. Second, there's a real shortage of regulated crypto companies that investors can actually buy into. And maybe the biggest piece of the puzzle, there's a huge shift in government regulation on the horizon that could completely change the game. And when we talk about scale, the numbers are just staggering. Right now, the stablecoin market is sitting at around $250 billion, but analysts and even the US government think it could grow 8 times bigger in just a few years to $2 trillion. That is a massive, massive pie, and you better believe everyone wants a piece of it. Now, a huge reason for all this optimism is a proposed law called the Genius Act. This thing would finally bring some clear rules to the US market. But here's the kicker. It's got this powerful clause that gives the US what's called long-arm jurisdiction. This could let regulators freeze the dollar reserves of unregulated offshore competitors, like Tether. They could essentially use the US dollar itself as a weapon to level the playing field. But look, Circle's journey to this blockbuster IPO was anything but stable, if you'll pardon the pun. It has been a story of huge pivots, incredibly tough choices, and at least one moment where they almost didn't make it.
Seriously, their journey has been incredible. They started out as just a simple Bitcoin wallet. They even took a swing at being a crypto exchange. But by 2019, right in the middle of a crypto winter, the founder admitted they were on the brink of going bankrupt. So what did they do? They made this massive, bet the entire company gamble. They sold off everything else to go all in on their stablecoin, USDC. A move that, well, has clearly paid off.
But here's the thing you have to understand. Circle did not do this alone. Not even close. Its success, its entire business model really, is deeply, deeply tied to a very complex and, as you're about to see, a very controversial partnership with the crypto exchange giant Coinbase. Some analysts have been pretty blunt about it. They've called the revenue-sharing deal between them an unequal treaty. And honestly, when you start to look at the numbers, you really start to see why. Okay, so last year, Circle brought in about $1.6 billion in revenue, mostly from interest on its reserves. But a staggering 56% of that, more than half, didn't stay with Circle. It went straight to Coinbase as promotion fees. And this is the crazy part. Coinbase only holds about 22% of all the USDC out there. Let me just break that down again. Out of $1.6 billion in revenue, $900 million went directly to Coinbase. So after Circle paid its own operating costs, it was left with a net profit margin of just 10%. It's a deal that is just massively tilted in Coinbase's favor. And when you dig into the fine print, you see just how locked in this deal is. As long as Coinbase hits certain performance metrics, which are private, by the way, it can renew the deal forever. Circle has zero right to terminate. There's even a clause that says if Circle gets into financial trouble, Coinbase can just take over as the issuer of USDC itself. It's a partnership that puts Circle in a very, very tight spot. So this critical and you could say constricting partnership with Coinbase, it doesn't exist in a bubble. It actually positions them as just one player in a much, much bigger fight, the global battle for the future of the digital dollar. And believe me, this battlefield is crowded. You've got at least 5 major factions all fighting for a piece of the action. You've got the huge, unregulated offshore incumbent Tether. You've got the onshore challenger, which is Circle and Coinbase. Then you have new politically connected players popping up. You have an alliance of Wall Street heavyweights like JP Morgan planning their own thing. And of course, you can't forget the Silicon Valley tech titans like Stripe and PayPal jumping into the ring. So where does all this leave us? Well, Circle's IPO was a massive success, for sure. But it's really just the opening shot in a much bigger war. As all of these giants collide, we're talking old money, new tech, crypto natives. Who is ultimately going to control the digital version of the world's most important currency? The answer to that question is going to define the next era of global finance.